1892. And interestingly enough, the NASDAQ's actually up on the day and adding to the gains that we saw in the tech heavy index. If you remember that double bottom ended December around 10,600. So basically 1,000 points off that. And I noticed 3 of the 4 majors holding above the 200, above the 50-day moving average. The NASDAQ's above the 50. It's the only one of the 4 that's not above the 200-day moving average. But as I mentioned, the holiday shortened week, which is packed full of earnings and eco data and some central bank activity with the BOJ tomorrow. But this morning it was Morgan Stanley, Goldman Sachs. Today on the close, United. Tomorrow we're talking JB Hunt, Alcoa, Discover, and Procter, Fastenal, Netflix, a couple names to keep an eye on. We've got a weak Empire State Manufacturing release this morning, which came in well below expectations. That seemed to weigh on the market a little bit, and that comes ahead of some other eco data this week, retail sales, PPI tomorrow, as well as some housing data, a handful of Fed speakers, so a lot for investors to focus on here. So maybe that would explain kind of a little bit of a trepid start to the beginning to the week.
Yeah, and we definitely have the dollar getting stronger here, negatively affecting crude oil, which was above $80 a barrel earlier, and also gold coming off those 9-month highs. So we'll continue to watch those asset classes. Thanks to Ben Lichtenstein, host of the Future Show here on the network, for helping us break down the equity markets. But Alex, let's get into this discussion about CMG. This is one of those companies, the Morgan Stanley analyst that downgraded it. He just assumed coverage. So he's downgrading it from what the previous analyst had. Traffic headwinds, fewer sales catalysts moving forward. They've got some inflationary pressures, but Alex, this is that restaurant chain that raises prices and people still don't stop going.
Yeah, it's become so ingrained in the everyday diet of Americans and those worldwide, as it's kind of perceived to be on the healthier side, right. But it's still quick, convenient, easy to go, maybe after work, after a trip to the health club or whatever it may be. But what I will say is you can't argue with the logic laid out. I think it's spot on. A lot of companies are going to face a lot of the headwinds that are laid out here, but this has been a tough one to bet against. So kind of buyer beware, or I guess seller beware.
Yeah, and if you looked at last quarter, revenue jumped. Restaurant sales increased 7.6% to the high single digits on that. Opening new stores, Chipotlanes. So the convenience factor is there, but they continue to raise prices. A lot of reward members in this company as far as use of the app, as every college kid in America probably going to Chipotle a couple times a year. But I wanted to look at this from that perspective. If you think it's going to go down now, the analyst put his price target down to 1664 from 1847. So cutting the price target big, but stock's still below that. Stock's up today 1.5% on a downgrade. So I looked at a different strategy here, Alex, where I'm going to look at put Condor to the downside, just slightly out of the money to the downside. In the February 3rd weekly series for this one, this will avoid earnings because the earnings come on February 7th. So buying the 1535 put, selling the 1515 put, selling the 1495 put, and then wrapping it all up by buying the 1490 put. So in essence, you're buying $20 wide put vertical, that's bearish, and then selling only a $5 wide put vertical. You're paying a debit of around $7. I think it's closer to $6 right now, but this is an example that we're using for it. If we pay $7, that's your risk, $700 per spread, 4 legs on this one, but it takes your break even down to $15.28. That's about $20 below the current share price. Alex, your thoughts on this over the next couple of weeks, this type of put Condor trade to get some downside exposure?
Well, a couple things. $20 seems like a lot, but it's just a little bit over 1% for a $1,500 stock. So keep that in mind. $700 debt or max loss on the $7 debit also seems like a lot, but again, you're looking at a $1,500 stock. So at some point, there's just limits to how small you can make the trades in big products, and this, of course, I think fits the bill of a pretty big product. A couple things that I think are interesting on this one in its construction, because of the width of the spreads that you've elected to use. If these all went through option assignment and exercise because they were all in the money, the debit spent allows for a profit even in a catastrophic move lower. The setup, though, I think is what's most intriguing here, Tom. Obviously, we don't know what's going to happen in Chipotle. This is one analyst outlook, assuming coverage on this one. And even with the equal weight, the price target's still above. But say you are a little bit more bearish on this stock, relatively less positive news into a big move higher. So you're selling into strength while the news doesn't really merit that strength. And so I think that's always interesting whenever you can be a little bit contrarian to kind of call back to a word that Randy used at the top of the show that I think is paramount to success, being able to take that road less traveled sometimes and take your shots.
Yeah, 1728 break even to the downside where you're profitable. You make the most between those two short strikes, 1495 and 1515, and probability of touching that 1515 level is 72% probability of touching on that. So as Alex mentioned, you don't need that massive of a percentage slide for this thing to be profitable, but it is a bearish trade. It's risk defined to the downside. You've got some transaction costs in that as a four-legged spread on that example strategy. All right, that's going to do it for Alex and I today here on Fast Market, but stick around right here on the TD Ameritrade Network. Next Gen Investing is coming up. Alex is hosting that too.
It's a 13-hour flight. That's not a weekend trip.
15 minutes.
Really? Why not? I'm going to take off.
Now, you downloaded the TD Ameritrade mobile app so you can quickly check the markets?
Yeah, actually, I'm taking one last look at my dashboard before we board.
Excellent. And you have Thinkorswim mobile?
So I can finish analyzing the risk on this position.
You two are all set. Have a great flight.
Hey, thanks.
We'll see you. They're getting so smart.
Choose the app that fits your investing style.
Feel that? That's the beat of global markets, the rhythm of the world. For most, the cadence of today. To us, the pace of tomorrow. It's people and machines uncovering opportunity. Cloud computing providing endless capacity. Blockchain making transactions safer and faster. New markets born where they weren't before. With ingenuity, technologies, and markets expertise, we create the possible. And when you do that, you don't chase the pace of tomorrow. You set it. NASDAQ. Rewrite.
Many traders may be willing to take on additional risk in pursuit of aggressive growth in their portfolio. More power to them. But if you're looking for a less risky alternative, you might want to consider checking out our income investing course. In the income investing course, you'll explore investing strategies designed to generate regular income and preserve capital. First, we'll delve into risk and return preferences. You will learn about the different ways to allocate a portfolio and create a payment schedule. Then we'll take a deep dive into the assets commonly held in income portfolios: dividend stocks, bonds, equity REITs, and cash. You'll also learn about routines for managing a portfolio over time. Along the way, you'll watch videos, take quizzes, and perform paper trades to practice your new skills. So if you're looking for an edge, consider your education. Head to the Education tab on Thinkorswim for the income investing course and a whole lot more.
Feel that? That's the beat of global markets, the rhythm of the world. For most, the cadence of today. To us, the pace of tomorrow. It's people and machines uncovering opportunity. Cloud computing providing endless capacity. Blockchain making transactions safer and faster. New markets born where they weren't before. With ingenuity, technologies, and markets expertise, we create the possible. And when you do that, You don't chase the pace of tomorrow. You set it. NASDAQ. Rewrite tomorrow.
So what are you working on?
I'm searching for info on options trading, and look, it feels like I'm just wasting time.
Wasted time is wasted opportunity.
Exactly.
That's why TD Ameritrade designed a first-of-its-kind personalized education center. See, you just...
Oh, this is easy.
Yeah, and that's...
Oh, just what I need. Courses on options trading, webcasts, tutorials.
Yeah, their award-winning content is tailored to fit your investing goals and interests, and it learns with you. So as you become smarter, so do its recommendations.
So it's like my streaming service.
Oh, exactly. But except now you're binge learning.
Ooh, I like that.
Thank you. I just came up with that.
You're funny.
Learn fast with the TD Ameritrade Education Center. Call 866-300-9417 or visit tdameritrade.com/learn. Get started today, and for a limited time, get up to $800 when you open and fund an account. That's 866-300-9417 or tdameritrade.com.
To test your knowledge. Head to the Education tab on Thinkorswim for the full options for volatility course and a whole lot more.
Good morning, everyone. Thanks for starting your day with us here on the TD Ameritrade Network. It's time to talk futures. I'm Ben Lichtenstein. I've got a great show planned for you this Wednesday morning. Let's begin like we do every single day. A quick check on where things stand as we head into the cash open and some of the overnight price activity we're seeing. It's been, well, somewhat mixed, for the most part positive across the board, though. Hang Seng, Nikkei, Shanghai Composite going out strong, as you can see, led by the Nikkei after some decisions on behalf of the BOJ to leave their yield curve controls in place. Checking in on European markets, you got the DAX, you got the FTSE, which are gaining this morning. The DAX up 0.25%, FTSE slightly higher, about 0.1% as we head into their late day trade, and pretty good reflection of what we're seeing here in terms of U.S. markets. All four of the majors, the S&Ps, the NASDAQ, the Dow, the Russell, adding to the moves we've been seeing. The Dow holding near 34,000 above it, the S&Ps above 4,000, and, well, taking a look at that, Russell parked at 1,900, but all four majors enjoying gains this morning. And checking in on some of the other top traded products, it's been a busy night for currency markets here. The dollar's slightly lower. Gold's been bid. It continues to be hanging out up around 1920. Crude oil bid after comments from the IEA. They said that demand is set to rise to all-time highs in 2023 as China relaxes COVID-19 restrictions. And basically, they talked about the two wild cards that are going to dominate the oil market this year. That's Russia and China. Let's check in on the VIX, hanging out at 20 after dipping below it yesterday. It's down by about 1.5% here. And, well, lots to cover here this morning. Let's get into what's behind the price activity we're looking at there, and how at the top of the list for investors and traders this morning, it's earnings, eco data, and policy decisions from central bankers. Let's begin with the surprise from the BOJ overnight, leaving their cap on the yield curve controls in place and vowing to purchase as many JGBs as necessary. BOJ Governor Kuroda said that they expect core consumer inflation to slow below 2% towards the latter half of this year. Kuroda said that it's not a sign, these purchases, this decision to keep the yield curve control in place, that they will never change anything in the YCC. But he said currently the thinking is that the current targets are appropriate. Now, the yen sold off sharply in reaction to, taking a look at the charts, you can see I've got the 5-minute candles here, the move off the highs from earlier this week, up around 79, all the way down to below 76.60. You can see we've kind of recovered after the spike lower, and just to check on where things stand in terms of the bigger picture. The yen's been recovering for a while now off lows that we saw in the fall of last year. That's been weighing on the U.S. dollar. And, well, we've got a busy schedule today in terms of data due out here in the U.S. Some numbers to keep an eye on. We've got PPI retail sales. There you can see that's going to be at the bottom of the hour. And then a little bit later on today, industrial production, some housing data, a handful of Fed speakers, and, well, some figures out overnight worth taking a look at. And, well, I noticed the UK CPI. Look at this, year over year at 10.5%. Now, yesterday we were talking about those wages, right? And how the UK reported, what was it, 6.4% average, their hourly earnings. And, well, you can see it's not keeping up, right? Look at this, at 10.5%. Look at the core, a slight uptick on the month over month, and flat on the year over year numbers at 6.3. But again, a month over month uptick. And then EU numbers also out this morning. I saw the core at 5.2% year over year. That's a slight uptick. How about the month over month coming in flat at 0.6? The headline number actually a decline of 0.4%, and the year-over-year number still stubbornly elevated at 9.2, but well below the prior levels of 10.1. Now, a little closer to home, some data showed large increases on a weekly basis in all three categories from the MBA mortgage apps: the purchase, the refinance, and the composite. Look at these numbers here, staggering. Composite up almost 28%, the purchase index near 25% gain, and the refinance up over 34% as rates have been coming off from those peak levels we saw last year, up around 4.3. And lastly, we've got earnings to keep an eye on here today, United and others to watch this week. We're going to dive a little bit deeper into the quarterly results from UAL in just a couple minutes. Alex Coffey joins us for that. But first, I want to get into some charts and some levels here because the S&Ps have been on the move. And let's begin with the 5-minute candles here and a granular look at some of the price activity we saw yesterday, the day session trade. That's the dark shaded area on your screen here on the left third of this chart. And you can see we traded all the way up to 40.35 before coming off and closing around 4,005, 4,007. You can see some intraday volatility overnight in reaction to, again, the BOJ, some of the price activity we saw. But for the most part, it's been relatively contained. Looking at what's going on in the Russell, a very similar pattern. You've got the NASDAQ, really not a lot of conviction one way or the other. But look at how the Dow actually stands out a bit. It was kind of a weak link in the chain yesterday. Large caps sold off here and back down below 34,000 in the overnight session. They're kind of teetering around that level right now as we speak, fractionally higher up on the day by about 0.1%. Taking a step back from the 5-minute time frame shows where things stand as far as the 30-minute candles and the price activity this week relative to last week's high and low. You can see we're holding near the upper extreme of the range that we established last week, but no real conviction yet in terms of breakout, in terms of follow through, just kind of acceptance of that move up. Again, from we're looking at, well, below 3,900 to, well, the highs just mentioned here up around this 40.30 level. Let's step back from the 30, checking on where things stand in terms of the hourly, because it paints a different picture, right? We're coming off those lows from December. We found some support around 3,800, but we're really struggling right now to get any real lift through this 4,000 level. It's the middle of the range that we established last month. We topped out around 41.80 after that CPI release and limited follow through, if we remember that. And then you can see some volatility we've seen on the intraday, but again, relatively contained. This is a pivotal area here right now, 4,000 to 40.50. Let's keep a close eye on that over the next couple days, because up and through it, well, it opens up a door for retest of the upper extreme. A failure lends itself for price to roll over here, and we work our way back down to those DC lows. Let's step back from the candles, the 60-minute candles, into the dailies, because the move that we just looked at, the S&Ps, the NASDAQ, the Dow, the Russell, all four of the majors here now above this blue line. That's a 50-day moving average. You've got the S&Ps, you've got the NASDAQ. I'm sorry, I meant to say the S&Ps, the Dow, and the Russell above the 200-day moving average. That's the yellow line. The only one of the four majors that's not is the NASDAQ. It's been a bit of an outlier. It's holding below that 200-day moving average. Now, the rally we seen in stocks is, well, in addition to the rally we've seen in some of the currencies, has sent the dollar lower. It's back below 102, as you can see, with that yen rallying back, and 10-year yields coming off from 4.3. As I mentioned, they're hovering around 3.5 right now, and just kind of looking at what's that environment has created. Well, when we were rallying, right, yields were inching up, or skyrocketing, I should say, to 4.3 in the 10-year. we were coming off from 4,800 down to 35, but now as yields have come off back to 3.5 from 4.3, look what's going on with the S&Ps from 3,500 back to 4,000. As mentioned, just a quick look at the VIX. It's been coming off now. Yesterday, we talked about how we were all the way down below 20, and we're back into the range that we established last month. It looks like some of that was rollover related in terms of the futures. So back to this 2021 level. Again, lots to keep an eye on here. A very busy morning today in terms of central bank activity. We've got a handful of central bank here, regional Fed speakers headed our way, in addition to, again, earnings and Nico data. Let's bring in Alex Coffey, Senior Equities Contributor and Manager of Trading Education at TD Ameritrade, joining us this morning to help us break it down and get a little bit deeper into some of these stories. Alex, what are you seeing in terms of this BOJ decision? It seemed like the BOJ had been kind of guiding towards this, but markets were expecting something a little bit different.
Yeah, and I think this is interesting because we've seen a lot of this in the U.S. Obviously, different actions taken, but the market guiding
expectations
for less hawkishness, and a Fed that has continued to deliver a more hawkish decision line and path forward. And so we're again coming to that crossroads here in the U.S. where we have market bets that are signaling easing monetary policy as this year rolls on, yet a Fed that seems somewhat steadfast in its conversation and signaling that isn't necessarily the case. BOJ, almost the exact opposite. We have a market that was looking for capitulation, finally a throwing in the towel for some of this modern monetary policy enactment that they've taken the line on in BOJ, but the market being defied as policy was tweaked ever so slightly. I think that's important to note. But it was tweaked in an effort to allow for a longer runway and continued yield curve control and easy monetary policy. They talked about a struggling Japanese economy and the need to remain easy for stimulus purposes and to make sure that things are clicking on those cylinders. But the things that I thought were interesting is some of the tweaks that they made. Prior, it was only 10 years that were fixed rate loans. Now they're adding the opportunity to potentially use variable rate loans. We'll see how that could impact things. But in this actual announcement, they just offered some 5 years for the duration between 2023 and 2028. So we'll see if that has some impact on those more shorter term rates. Obviously, a big part of the conversation has been the longer term rates for Japan. But you see the results in terms of market reaction, yen spiking back up, or in terms of the USD JPY or losing some of its value. If you look at it in terms of US dollars, back up towards 130, though, in the commonly quoted Forex pair. NKD, the Nikkei, surprisingly, kind of, to me, is up 1 2/3% here. So this is one of those situations where easier monetary policy is maybe trumping the fact that you need it.
You know, I was pointing out again the overnight activity we've seen in terms of Asian markets, giving U.S. markets a little bit of a lift here as well. If we could just take a look again at the 1 minute candles, the Bank of Japan's decision sent the yen lower down to 76.55 in the futures, back up to 7,800, a significant move. They committed to boost their loan facility to commercial banks. Governor Kuroda talked about how he wouldn't rule out offering the funds at a negative rate. And ultimately, I'm going to be keeping a close eye on these JGBs, these purchases. They've already bought $100 billion, it looks like, over the last 4 days. So this is going to be an ongoing effort, to say the least, to continue to keep that curve, that cap on, and we'll see if it gets tested again in the near future. Let's move on here because we also have some other top stories to keep an eye on here today. Potentially see some market movement at the bottom of the hour. We've got PPI and retail sales due out.
Yeah, these are going to be quite interesting. Obviously, no introduction needed for either. This is going to give us a look at sort of the leading indicator when it comes to inflation. So obviously, we're very conscious of how much things cost when we go to the store and we buy our consumer goods. But ultimately, when those things are made, the input costs are more closely tied to the producer price index. Very much kind of the expectation is for this to sort of mimic and mirror what we just got in the CPI report, which is actually slight deflation month over month, or at least almost a flat line. And then, of course, you're still going to see elevated year-over-year prints. This is going to naturally dissipate if we continue at sort of this flat line month-over-month pace, as the base effects are going to work themselves out. We didn't have a ton of inflation in the early parts of last year. It really ramped up in the second, third quarter of last year. And once we start comparing those numbers year over year, you're going to get a little bit more muted year over year numbers, all else equal, if you have sort of that flat month over month data. So I'm watching the month over month number. Obviously, if this can come in as expected, down slightly, 0.1%, or even more than that, that could potentially buoy the market. But also, if it comes in a little bit warmer, you could see a little bit of a choppy reaction to that, as well, as that could kind of counteract some of the increasing confidence that the inflation picture is getting better, and that the worst of it's potentially in the rearview mirror. As far as retail sales, of course, this will be a look at the December figure here, Ben. If you recall, the November figure, as you can see on those prior numbers, was actually quite a disappointment, down 0.6% month over month. Even core retail sales were down 0.2%, and it's actually looking to get a little bit worse. So we hear so much about that holiday period being so important, but when we get down now to the brass tacks and we're looking at the numbers, it's not going to be, if this just comes in line, it's not going to be that blowout holiday season that many were hoping for.
Let's also talk about the other focal point here. I mentioned at the top of the show for investors and traders, we had UAL, United Airlines, talk to us about what the quarterly results showed. Pretty good numbers.
Yeah, really, really strong numbers. Not entirely unexpected. We had talked to the team from Likefolio yesterday on Fast Market, and the anticipation was for a strong report. We kind of phrased it as this one was playing tiebreaker. American Airlines surprise release the day before Delta. Delta came out, numbers were strong, guidance was a little bit weaker. From what they were tracking at Likefolio, following some social sentiment, they expected a stronger guide from United relative to Delta,
they got one.
And we got all of that. And so you look at the move, it's well inside the expectation. I don't think that that's a surprise. This stock has run up tremendously to start this year. Upwards of, I think, 35% going into this move or going into this announcement. So at some point, this optimism is priced in to some extent. But you're still getting a positive pop. Yeah. It's still a very impressive report. And you can see the initial, I think the initial reaction tells you all you need to know. A huge spike, but as the realization kind of comes to, where this stock is sitting, how much it's run, it sort of dissipates back to a more modest response, but still an impressive number nonetheless. EPS beating by a huge number, coming in almost $2.50. Revenue, obviously a nice beat as well. But the biggest key piece here outside of the EPS beat was that they guided for a very, very strong future here, which counteracts then, and I think did play tiebreaker to those other two, which had a more mixed outlook. And so we can kind of take Southwest, set it off to the side, as it's obviously got some different things going on, and also a different kind of mix of a consumer. It's a little bit more leisure focused, where United, Delta, and American maybe skew a little bit more business, and certainly United and American skew a little bit more to the international travel than a company like Southwest.
UAL, the tiebreaker. We'll see if the others can play catch up. I saw if higher today, it looks like, Alex, up 9 days in a row for United. So a nice run up into earnings. And to your point, they're still gaining on the news. So maybe some more upside here to come. Alex Coffey joining us this morning. I always appreciate you with us here, Alex. Thanks for filling in. And coming up, we're going to be talking crude. The WTI back above 82 this morning after comments from the IEA. David Williams, investor forecaster at Page Traders, here to talk energies and more futures. In 2 minutes, we'll be back.
We empower those who act. Those who see the correlation between upswings and downswings. Those who manage risk by meeting each obstacle with a perfectly executed strategy. A measured approach, the right tools, driving accuracy. CME Group, where risk meets opportunity.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
Before diving into the markets, prepare for the trading day with the Market Minute newsletter. Videos, market insight, and more delivered right to your inbox. Go to tdameritradenetwork.com, click on the pop-up to subscribe now.
Binge watch the market with TD Ameritrade Network.
The dollar, interesting activity.
So now I did some deep research into this.
People are out of the house and engaging with the U.S. economy. Tune in 24 hours a day, 7 days a week on tdameritradenetwork.com to all your favorite streaming services.
You can also take us on the go with our CarPlay-enabled iOS app and our audio-only podcasts. TD Ameritrade Network, available anytime, anywhere, on any device.
Welcome back to the Future Show here on the TD Ameritrade Network. It's time for my chart of the day. That's crude. WTI futures on the move higher this morning, up and through the $82 level as we speak. They're higher by 1 3/4%. Let's just begin with the move up we've seen since Tuesday this week from, well, just below 79 on the left side of your screen, a well-defined trend environment to the upside. We're talking higher lows coming into play. And I mentioned all the way up to 82. We topped out overnight at 82.17. Taking a step back from this 1-minute candle, look at some of the bid activity we've been seeing in the WTI, to look at the 5-minute candles now, just bringing a week's worth of data into view here. You can see all the way from 73 up to 82. So almost $10 to the upside in just about 1 week as we check in on where this puts us in terms of the more intermediate, the, well, hourly candles. You can see the move we just looked at from the lows that we saw in January around 72 all the way back to 82. And notice that we still have yet to take out those highs that we saw back in December. That was up around 83. So as I look at this chart, I see a couple things. First and foremost, a couple well-defined highs here up around this 93 level. That's where we topped out in December, right? It's a pretty well-defined double top up there. And then as I notice, a series of lower highs coming into play as crude oil prices have come off. We, again, started to, well, we formed a bit of a triple top around here, possibly if this fails and roll back over. But I just want to point out the bid activity that we've been seeing still relatively contained on the bigger picture in terms of that D's high. So right back up to it, but keeping a close eye. We still have yet to take it out. You can see here the move we've been seeing. If higher today, it looks like crude oil up on the day 5 days in a row, and it looks like 7 out of the last 9 as we break back above the 50-day moving average. And well, this is a level that we've struggled to get up above since, well, falling back below it in June of last year. A couple tests back in October, and we're talking November, but they were short-lived, just a couple days, right? So keep an eye on this move up. Again, if higher today, crude oil, the WTI, we're talking 5th day in a row, back above the 50-day moving average. We're enjoying a 1 3/4% gain today. And hey, I want to point out the Brent's been on the move as well, energy products in general. And that's what I want to discuss with David Williams. He's an investor, he's a forecaster at Page Trader. He's joining us this morning to take a look at the bid we're seeing in the WTI as it's, nearing, right now back at 82. David, good morning to you. Welcome. Let's begin with how, well, fundamentals, I mean, one could point to what's behind the bid. There's a few of them, I guess one could argue. You got the IEA. They're predicting record demand in 2023.
Yeah, good morning, Ben. Great to be here. You know, Ben, a really big part of the fundamental side of crude continues to be based on China and its perceived economic future. On its own, I believe that a reopened China and a strong rebound from the now abandoned zero COVID lockdowns could overcome much of the concerns regarding a worldwide economic slowdown. And more specifically, there are some consensus that China's oil consumption could pick up to 16 million barrels per day, which is an increase of about 800,000 barrels per day over the current consumption. So yeah, fundamentals abound for crude oil. They're responding very well. We can talk technicals, but right now I believe most of the fundamentals are probably related to China.
Well, I want to talk technicals, but just in terms of that point about China, the IEA said that the shape and speed ultimately, it's a little bit uncertain in terms of the reopening. That remains one of those key components to keep an eye on. So we will watch that very closely. Let's talk about some of the levels, because you were looking for a bid to come back into the market here off those lower levels last time you were on the show, and it looks like we're seeing that play out.
Yeah, we have said, I think for several months now, our key level has been $75. If crude could close monthly above $75, then we felt that that would be a stronger position for an advance to at least an attempt at $91 into March of this year, March 2023. Since November, when the $75 level was first touched, the crude has closed every month since November above $75. I think we closed November above that, to December above that, and we're now currently trading, close to $82. So a January close this month above $75 will likely set the stage in our work, we believe, for an advance to at least $88 and a test or completion of $91 into March of this year. If we get a surprise monthly close back below $75, which we're not really expecting at this point, that certainly is a weaker position. And in our work, it points to lower prices, potentially $58, which we've spoken about on your program before. So we're kind of excited about the technical prospects because the market has stayed above the $75 level. Everybody's going to have their own key level, but in our work, since we are above 75, and we do believe they'll very likely close this month above 75, if that's the case, then we think we're bullish into March.
We'll keep an eye on those levels, 75 being the area to watch in terms of monthly close, targeting 88 ultimately, and then, as you mentioned here, 91. I think it's sometimes just fascinating how, and you're a technician, but I know that you also incorporate the fundamentals, right? You don't put your blinders on and focus only on the levels. And I think it's important here to kind of point to how, well, even to what you were just suggesting, hold above 75, which we are, targeting 88, ultimately 91. I mean, that feeds right into what we're hearing from, hey, it wasn't just the IEA today. I mean, the EIA yesterday. We've got the OPEC monthly, we've got the OPEC meeting coming up at the beginning of February. I mean, a lot of focus here on the fundamentals, and we are hearing about how that primary focus, the theme really has been China and that reopening trade.
Yeah, I mean, there's no doubt that there is a growing consensus that things, in spite of the fact that we may have a recession, and we've talked about that word, it doesn't matter what the word is, it just matters that if there is an economic slowdown, there's enough going on here to keep crude oil potentially bullish throughout a decent portion of 2023. So that's what we're looking at. Ben, if I could, I'd like to speak a little bit about the S&P if you want to chat on that for me.
I do, David, but I wanted to just finalize this discussion here because, I was listening to all these CEOs and some of the financial bigwigs at Davos that we're hearing from right now, and a lot of discussion and kind of along those lines as far as what we were just hearing about from the IEA, the EIA, and OPEC recently as far as China being the wild card. I mean, there's a lot of uncertainties, and you mentioned how the market's very dynamic, right? The oil markets, that's always the case in terms of the fundamentals, in terms of the technicals. But, we've been hearing from a lot of the talking heads at Davos. They're saying basically that inflation's not waning. That comes as prices in crude have been coming off, right, back down to the $70 level from 130 last year, 120. Again, I don't want to over-exaggerate that upper extreme, but now what I'm starting to wonder is I hear everybody talking about inflation waning and some of those pressures easing. What if we do see crude back to 88, back to 91? I mean, we could see over the next period of a couple months a shift to the upside compared to the shift to the downside that we've seen in some of these inflation concerns. And the market and market participants should be aware of this. I mean, kind of speaking to the dynamics and the fundamentals and the technicals, I guess, full circle.
Yeah, no, really well said and great observation. The inflation question is still in the air. I mean, we certainly have inflation, but the question is do we lower inflation? Interest rates will play a part in this as well. We have an upcoming interest rate announcement. And there's going to be a softening probably. We don't know exactly for sure, but there's likely going to be some softening in the interest rate increase. A lot of this plays into the crude oil market. It's an exciting market. I prefer, for people who are newer to the markets, in my opinion, I think the S&P is a much more complicated market than crude oil is. people who are new to the markets may want to take a look at that in the mini contract as opposed to taking on something more complex like the S&P. But both of them are just wonderful markets.
We're looking at the TNX here right now and crude oil. We're talking about TNX and candles up to 4.3 last year, and it's come off. And crude oil's come off those spikes that we saw last year as well. Simplify the SPX S&Ps for us a little bit, David. Talk to us about some of those levels that we should be watching. You mentioned.
Yeah, basically for us, since April of 2022, we were looking for a decline in the S&P down to 3730, and we have forecast on your program several times that we believe that level is going to replay again this year in 2023, $3,730. But it'll also potentially replay as early as the first quarter of 2023. Another thing I'd like to mention is we believe that the third quarter of 2023, the S&P will begin a fast directional move of approximately 900 S&P points. In other words, to us, the third and fourth quarter of this year.
Is that one way or another?
I'm sorry?
One way or another?
Well, at this point, we believe it's likely going to be to the downside. Okay. But we're not quite ready to make that a part of the official forecast. But we do know we have something called a volatility cycle. We believe it's going to occur starting in somewhere in the third quarter of this year into the fourth quarter with a very directional move. And we have determined that that move will be about 900 S&P points. But you have to remember that's going to be spread mostly across a quarter to a quarter and a half of time. But it still is a pretty big move, and it's going to be pretty fast. So we're kind of excited about that. Shorter term, Ben, on the daily chart, we believe that daily closes above 4,026 are a stronger position, and daily closes below 4,026. If they're not weaker, they're at least not as constructive as above. So we'll see how the market handles themselves today.
40.26 on a more short term, 37 bigger picture to the downside in terms of the S&Ps. David, we'll keep an eye on this. Appreciate you sharing part of your Wednesday with us. David Williams, investor and forecaster, Page Trader. We're going to take a quick break. Stick around. PPI, retail sales. Bob Iacchino joins us, PAP Trading Partners, and Jenny Horns here to help us sort through it all. Lots more futures headed your way in just 2 minutes.
We empower those who act. Those who see the correlation between things above and things below the surface. Those who navigate risk by meeting every turn with a heightened awareness of what's possible. Constant assessment. Determine the best position. Catch the perfect wave. CME Group, where risk meets opportunity.
Binge watch the market with TD Ameritrade Network.
The dollar, interesting activity.
So now I did some deep research into this.
People are out of the house and engaging with the U.S. economy. Tune in 24 hours a day, 7 days a week on TDAmeritradeNetwork.com to all your favorite streaming services.
You can also take us on the go with our CarPlay-enabled iOS app and our audio-only podcasts. TD Ameritrade Network, available anytime, anywhere, on any device.
Welcome back to the Futures Show. We're waiting for the PPI, the retail sales, to hit the wire. While we do, let's check in on where things stand. Into the cash open, four majors, the S&P, the NASDAQ, the Dow, the Russell here are holding on to some gains right now and actually adding to them in reaction to PPI. I'm looking at the headline number, down 0.5%, a significant decline, more than expected. And it looks like the core coming in also in line to slightly lower than expected. That's giving the indices a lift. That's selling, the dollar's selling off, I should say, down to 101.52. And look at the bond right now, the 10-year, they're spiking. Gold rallied back up to 1930. Again, I want to point out here, inflation data on the producer side of things, PPI coming in line to slightly lower than expected. We'll get a full screen together for you. But hey, retail sales also coming in a little bit soft on a month-over-month basis, down by 1.1%. I want to bring in Bob Iacchino. He's joining us from Path Trading Partners to help us sift through the data. Bob, let's begin with the inflation numbers. PPI coming in, it looks like for the headline number, softer than expected, and it looks like a revision lower for the prior. Looks like the core hit expectations, but the year-over-year numbers, we did see a nice decline to 5.5 from 6.2%. Here you can see the numbers here. Talk to us about how this kind of feeds into the trend we've been seeing, Bob. Looks like inflationary pressures are easing.
Yeah, definitely. And there's no doubt about it, Ben, that the economy is slowing. You see that in the retail sales numbers as well, as they came a little bit lower than expected. I mean, down 1.1 ex autos. That's pretty interesting to me. And again, there's no doubt that the economy is slowing. The question now becomes, is it slowing enough to kind of back the Fed off and give stocks that extra lift they've been getting every time yields fell? This is not a one-to-one relationship, but the correlation we've seen between lower yields and higher indexes, especially the NASDAQ, continues. There is the odd day here or there where that isn't the case. But again, you're seeing it today. We saw a spike in the ES and especially the NASDAQ after these numbers came out, as you saw yields fall. Before this number, yields were down 5 to 6 basis points across the curve. I'm not sure where they are right now, but from you saying that the Treasury, the indexes themselves or the futures were spiking, it is very likely that yields are a lot lower than that 5 to 6 basis points that I saw earlier this morning.
Yeah, look at the 10-year spiking here. We're talking to 115.15. And as I look at 10-year yields, they're at 3.42, it looks like here. So again, 3.43, it looks like. So they are off by about 3% for the 10-year. The 30-year, not as much. It looks like down about 2.33%. But yeah, this is in line with what we were expecting here. Now, you mentioned how the economy is slowing, a reflection thereof. You said the question, is it enough? I guess many would raise the question, is it too much, Bob?
Well, you know, the thing I keep trying to point out to people, and I think it's been pretty lost on everyone I talk to, and that's not me being arrogant. That's me just pointing out that the Fed's mandate has nothing to do with economic strength. Zero. Full employment, yes, but we had a 3.5% non-farm or unemployment rate, and that's pretty full employment. So in order for the Fed to actually tame inflation, they actually have to slow the economy much more than we've seen so far. You know, the last CPI figures we got, if you looked at the core, you can look at the month over month, and I've said to you before, Ben, I think you agree with me, the month over month now matters much more than the year over year. The year over year is nice. Yep. It's very nice to see it decline.
But not the best reflection.
5%, but it's not the best metric, because the month over month is going to decide where the year over year goes. So we're looking almost exclusively a month over month now, and we got the first decline since 2020. Okay, the first month over month decline on the headline inflation number since 2020 in that last reading. The core was still up. So this again points to inflation, prices rather, are rising from a higher base. They're not falling, they're rising from a higher base if you take out this 1 month's decline. So you have to see more of that. That's number one. And number two, has the economy slowed enough to slow job growth and to slow wage growth? You know, in that last batch of data we saw, services wages were still going up. They hadn't fallen at all. Wages in general in the last non-farm payrolls rose again. And what that indicates to me is that inflation could be taking a dip month over month and sort of coiling itself to spike again. And that's bothersome. That's troubling for me as somebody who's watching what the Fed may or may not do.
Just want to point out here that revision here in the retail sales month over month here to down 1%. Prior was down 0.6%. So again, to Bob's point, the economy is slowing here, and we're seeing that in the data. Let's talk a little bit about the BOJ in terms of their decision overnight. Bob, how big of a surprise was this for you? Were you expecting them to announce some sort of easing in terms of those controls, or you were kind of in line with what they announced in terms of just sticking to their guns?
Okay, so as a strategist, it's in line with what I thought they would do. Okay. As a sort of amateur economist, I think they're crazy
for a surprise. Yeah.
right? They should have changed policy. They should really stop it because this policy effectively is an easing policy into what they finally have. They've been itching for inflation for a long time, and they finally have it. And they're easing into that by buying treasuries at that 10-year sector to keep that within
At quite the clip, too.
Go ahead, Ben.
I was going to say, at quite the clip. I mean, 100 billion over the last 4 or 5 days, it seems like.
It's huge, often unannounced. And they're doing this, they're putting yen into the system at a time where they finally have inflation coming to bear. They've got more yen going into the economy to stoke that inflation even more. This is the issue, is that inflation is hard to control. And I think this goes back to the US Fed. The Fed is likely going to drive the US economy into recession. But because it's Fed driven, I think the Fed believes they can get us out of that fairly quickly. You know, it took 27 years for rates to get from where they were in the 20% range to zero. It's likely going to be an ebb and flow back to get rates to normalize. And what we saw in that move down was a series of lower highs and lower lows for rates. We're likely to see a series of higher highs and higher lows for rates as they tick back up. The Japanese yen, the Bank of Japan, they sort of need to get on board with that, or it's really going to cripple their economy from a debt perspective.
We're looking at rates here from 7% back in 1997 all the way down to, below 0.5% here as we came off those pandemic lows, back up to 4.5%. You can see we're back to 3.5 right now, and this is the TNX. Bob, let's talk a little bit about what all this means for the U.S. dollar, because it's been on the decline. I mean, should that continue if status quo continues? And it doesn't seem like much is changing at this point. Those inflationary numbers, not very supportive of the greenback. I mean, looking at it right now, down about 0.5% again.
Yeah, I think this is a concerning thing from a standpoint of what the dollar is likely to do. We're back to levels of about 2021 or so on the U.S. dollar in aggregate. And when you look at it from that perspective, I think you've got the same issue. I think we're in for a little bit of consolidation in the dollar before it makes a move higher, but not to the old highs. I just think this is going to be, again, consolidation and slightly higher, simply because the current environment is markets don't believe the Fed. And that goes against the old adage that you and I grew up with at the CME.
Don't fade the Fed.
Don't fight the Fed.
Right.
And everybody
I
right
did
now
once, Bob. It didn't work.
It didn't work. And everyone is fighting the Fed now. And you look at it from a perspective of what happened to the 2s, 10s, that's on the Fed side. You know, last time I looked at the 2s, 10s inversion, it was 65. 2 days ago, it was 73. That's what the Fed wants to see. And that, by the way, is supportive for stocks. So if we continue to see the 2s, 10s go back to a steepening mode, that's good for equities, and equities can rally in that environment. But if we go back to deeper and deeper inversions, that's just more and more recessionary.
Bob, one of the products that we look at when we talk about the dollar, obviously the yen, the euro, the British pound, the three majors at the top of the list. But talk to me about the peso. What are we seeing in terms of some of the strength as far as our neighbors to the south? The Mexican peso has been on a tear to the upside. It kind of caught my eye yesterday. I'd sort of flown below the radar, but as I was reading up on it, it just sounds like there's a lot of expectations with some of the uncertainties in terms of China that Mexico could benefit from some of that.
Yeah, Mexico is definitely going to benefit from the supply chain moving at least to a continental sort of a mainland background where you go between Canada and Mexico, and it kind of eases up the supply chain problems that we had in the last issues with the overseas suppliers, especially China. Having said that, higher rates haven't really bled into emerging markets as they should yet. That stronger dollar, despite how much it's fallen, is still just kryptonite for emerging markets, especially on the yield perspective. So with higher yields comes problems for the emerging markets. So the peso right now is my favorite short. I haven't shorted it yet. I don't short tops. I short moves back down. The Mexican peso, when it starts to sort of ease up and fall a little bit, that's going to be my favorite short coming out of versus my gold long that I have.
Recently breaking out, you're up and through this 52 into the near highs that we saw back in, it looks like February of 2020. So something to keep an eye on here if this big continues. But you can see the move up here. We've seen looks like a 4 out of the last 5 weeks to the upside. And you can see it's just continuation of the move we saw off the lows from that spring of 2020, the pandemic lows. Is again, the peso's recovered significantly back through 5,800. 5,300. Bob, appreciate you joining us here. So I'll look here at some of the numbers released here at the bottom of the hour. surprise, I guess a positive surprise for the bulls in terms of the PPI, the retail sales showing inflationary conditions easing and demand as such. Bob Iacino, founder, chief strategist of Path Trading Partners. Appreciate you joining us now for a closer look at a couple of those data points. Let's bring in Jenny Horn, markets correspondent here on the TD Ameritrade Network. Jenny, Bob broke it down for us. We only had a couple minutes to look at the numbers. He pointed to how this shows that the Fed's initiatives to slowing the economy down are actually working. What did you see when you dove a little bit deeper into some of these specifics as far as the data that was released at the bottom of the hour?
Yeah, Ben, and to speak to that, I mean, I think that's a really good point, but you kind of think, I'd hope that some of the Fed's efforts were working or at least showing some effect.
If not, we'd be in trouble.
Right, exactly, because I did see the figure on an unadjusted basis. The index for producer price index did increase 6.2% in 2022. That's compared to the increase of 10% back in 2021. So that has shown those efforts. But to break down even further, in December, the decrease in the final demand index can be attributed to the 1.5% decline in prices for final demand goods. While in contrast, the index for final demand services did rise about 0.1%. But in final demand goods, we saw prices for goods move down on average 1.5% in December. The largest decrease was since falling about 1.8% back in July. Now, leading the December decline in the index was energy, dropping almost 8%. We also saw prices for final demand goods decrease 1.2%. Perhaps a sign of optimism there, but then product detail, nearly half of the December decrease in the index for final demand goods can actually be traced to the 13% decline in prices for gasoline. The indexes for diesel fuel, we saw dried vegetables, canned, cooked, smoked or prepared poultry, as well as eggs also did increase in the month of December. Now, we also saw the index for deposit services, as well as airline passenger services, trucking, and patient care. Those were actually moved higher in the month of December. So pretty much actually on par with a lot of the themes we saw in the CPI report here, Ben. Processed goods also still maintained high demand. So all in all, there is still an inflationary read within this PPI report today. It just depends on, I guess, how you really look at it.
It does. And, it also depends on how you look forward from it, I guess one could argue, because energy prices back on the rise here right now. So while you pointed out gasoline down 13%, I mean, we've got crude back above the $80 barrel level convincingly right now. Retail sales, I just want to point out, also reflection of what Jenny was just suggesting. The economy is slowing a bit, down 1.1%. They were looking for a decline of down 0.8, and prior came in revised down 1%. Jenny, also a reflection of the economy slowing while jobs remain, labor conditions very strong. Still, we have been hearing about some layoffs. Most recently this morning, it sounds like Microsoft, another wave of job cuts. Talk to us about some of the specifics here.
Right. Microsoft is preparing to chop thousands of jobs in specifically engineering and human resources, according to reports we actually got yesterday evening. Now, the software giant could slash about 5% of its workforce, or about 11,000 jobs, according to Bloomberg report. But now we've gotten several other reports outlining this news update, but saying that the unspecified number of layoffs will be announced in Microsoft's engineering divisions on Wednesday, and they will actually be significantly larger than the 1% cut that Microsoft did announce last year to its workforce. This comes after a slew of course, tech names have also announced layoffs. Just to name a few of the big ones that are memorable and I think notable: Meta, Amazon, Salesforce, Cisco, Intel, Coinbase, Snap, HP Inc., just to name a few. There are so many companies that have announced layoffs as of late. This is obviously not a Microsoft-specific issue, Ben, but not exactly what you want to hear as a shareholder.
Yeah, it started off with social media. It seems to be a bit more widespread as of recent. Knock on wood. Hopefully that doesn't continue. Jenny Horn, appreciate you joining us here. A solid breakdown. I'll look at some of the data and filling us in on the latest in terms of Microsoft layoffs. Coming up, Michael Zaremski is going to help us take a look at tomorrow's numbers. We got jobless claims. We got some companies reporting quarterly results on our radar. And, well, the chart master, Rick DeCat's here. He's going to help us break down the move we saw in the yen overnight in reaction to that surprise BOJ decision. We're talking more futures. You're positioned properly. You're watching the TD Ameritrade Network, so stay where you are. We'll be back in 2 minutes.
We empower those who act. Those who see the correlation between upswings and downswings. Those who manage risk by meeting each obstacle with a perfectly executed strategy. A measured approach, the right tools, driving accuracy. CME Group, where risk meets opportunity.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. The platform demo webcast series is designed to help you broaden your knowledge of tools and resources available from TD Ameritrade. You'll learn tips and tricks to help navigate TDAmeritrade.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
TD Ameritrade Network has arrived on the floor of the New York Stock Exchange new location with access to the biggest newsmakers in Wall Street, bringing you in-depth market coverage and real-time trade ideas. Do not miss our exclusive interviews with CEOs, bell ringers, traders, and stock pickers, keeping you informed as you navigate your investments. Don't miss Trading 360 at 11 a.m. Eastern and the watch list at 2 p.m. Eastern, live from the New York Stock Exchange, only on the TD Ameritrade Network.
Welcome back to the Futures Show here on the TD Ameritrade Network. Stock index futures products are higher this morning in reaction to data at the bottom of the hour. PPI retail sales showing the economy slowing, and while inflation appears to be easing, that's weighing on the U.S. dollar. We've seen rates come off again. All of this kind of in line with the trend that we've been seeing. And while we were just talking about layoffs before the break, I want to bring in Michael Zremski, Director of Futures at Charles Schwab, because Michael, whether you're talking Microsoft, layoffs, earnings, eco data, some of the focal points for investors and traders headed into the cash open, I think it's important that we don't get tunnel vision, right? We got to kind of keep our broader perspective here in terms of what's going on. Let's talk a little bit about some of the data that we should be watching tomorrow. We've got the jobless claims. We've got a couple companies reporting quarterly results. Let's begin with the weekly data due out. Jenny just mentioned the Microsoft layoffs, but for the most part, the weekly numbers have been showing strength in U.S. labor conditions remain.
Good morning, Ben. Yes, exactly. The labor market, at least on the weekly jobless claims figures, have been rather solid as well, too. They've really been range bound the past several months here, Ben, between a range of, let's say, 200,000 and 260,000 at the top here. But we've been generally in that lower end of that range. Last week, for instance, 205,000 jobs on the claims number as well, below expectations. Now, I expect to see a little bit of an uptick this week, about 214,000 expected. But even the continuing claims, which have been really kind of trending upward the past several weeks as well, too, peaking just above 1.7 million. Those are actually starting to come down as well, too, as those people that have been unemployed for several weeks there are starting to find employment as well, too. Just goes to show you that despite all the announcements of layoffs, especially for some of the big tech companies as well, too, it seems like the workers there are just not unemployed for very long there. And those with really good especially in that tech sector. They are finding jobs, and especially some of the smaller companies as well too. They have really been struggling there to find labor in this tight environment.
You know, Michael, let's stick with this point for a minute before we get into the earnings, because I want to get your thoughts. It seems like, as you were saying that, I was reminded of how after the pandemic, we were looking more towards the weekly numbers because we were talking about how the monthly numbers were a bit of a lag, right? We could get a better indication of those jobs returning to the market, workers coming back to the workforce, and we would see that in terms of the weekly data. And now I think as we start to worry or get concerned about, again, with these layoffs, Microsoft most recently, some of those numbers coming off and the economy slowing and labor conditions a reflection of, I think there should be a lot of focus on the weekly data, correct me if I'm wrong, versus the monthly numbers, as this is going to give us kind of that finger on the pulse, right? But also keep an eye on the longer term, the 4-week, the continuing claims that you pointed out, which I like, and a good reminder there. But kind of along the lines what our last guest, Bob Iacchino, was just talking about in terms of the PPI, right? We're focused more on the monthly numbers than we are on the yearly because we know there's a bit of a lag there.
Absolutely right, Ben, especially with those weekly numbers there. That's really more of a kind of a leading indicator as well, too, when we're seeing the monthly data as well. You're seeing, you know, the adjustments there as well, too, and also that lag there on employment.
Yeah.
So, yeah, I think this kind of gives you that tell there. We start to see the initial claims start to spike higher week over week there, and especially those continuing claims. You see those, like I said, that rising trend we've been seeing as well. That continues as well, too. That just kind of gives you the idea here that, yes, the labor market is starting to soften there as well, too. People that are unemployed are taking longer to find jobs as well, too. And that's kind of that canary in the coal mine that's saying that, yes, the slowing of the economy is starting to really affect the jobs market.
Or which came first, chicken or the egg kind of story. And I don't want to discount the monthly number by any means. There's a lot of very valid information there. I'm just saying, again, compared to the weekly number, maybe that high frequency data being a little bit more the focal point right now. Let's talk about some of the other focal points for investors and traders right now as we look forward. Procter & Gamble set to report quarterly results. They're going to open their books today for us. What are we expected to see when we get the results from them?
Well, Procter & Gamble, they're one of the the main consumer staple companies as well, too. Expected to see earnings per share of about $1.58 as well, too, and revenue of about a little over $20 billion as well. So these numbers are a little bit better than we saw in the last quarter as well, too. But once again, this is a company here that has really, performed well, and it's not a cheap company as well, Ben, as a lot of these consumer staples are, as traders and investors are kind of shifted that as sector there in concerns that we're seeing a slower economy as well, too. For somebody like Procter & Gamble there, we're going to want to hear about how is the consumer there faring with higher prices as well, too, and are they able to keep on passing those higher prices due to, rising inflationary pressures as well, too. Or we're starting to see a little bit of pushback in consumers there, maybe going to a little bit of a cheaper brands as well, more of the store brands as well, too, as a higher cost as well. Too, kind of really affects their pocketbook as well, too. But like I said here, this is a stock here that's performed really well in 2022 as well, too. But like I said, not a cheap company here compared to the S&P 500.
We'll keep an eye on shares of PG in reaction to the numbers. And correction, I said today on the close, that's actually tomorrow. Fastenal, a couple of their names that we're watching this week as we wait for Netflix and some of the other big names. But Mike, talk to me, because there's also a handful of regional banks I saw on the list of companies reporting.
Yeah, a slew of the regional banks are reporting, especially tomorrow. We got Truist there. We got M&T Bank. We have, FITB there, Fifth Third Bank, Key Corp there, Northern Trust here in Chicago there, all reporting out tomorrow as well, too. And now for the regional banks, what you really got to watch there is that net interest margins as well, too. And that's really the difference between what they have to pay to get into demand deposits, such as checking and savings, as opposed to what they could lend out as well, too. With the interest rates rising there, normally that would actually benefit these regional banks there as well, too, as they could pay a lot less to get those deposits in and lend at a higher rate. However, if the economy does start to slow, Ben, that could actually really affect the amount of demand for loans there, which actually, hurts their revenues. And as well as we start to see defaults, if the economy really starts to slow as well, too, that could definitely also affect the bottom line as well, too. Plus, when you're seeing such as U.S. Treasuries here yielding over 4%, 4.5% as well, too, these banks here may have to raise the amount they pay to get those deposits in as well too. So it's kind of a slippery sword there as well too. And the banks here that could actually have those sticky demand deposits and not have to increase the amount they pay to generate additional deposits coming in are the ones that are really going to benefit here from this current interest rate environment.
Sounds like a possibility for a 1-2 punch here playing out. We'll keep an eye on the regional banks as well to see if that does become a scenario, if that's something they're talking about. Mike Zaremski, appreciate you joining us here. Solid breakdown, and we'll look forward to seeing you back here tomorrow. We're going to bring in the chart master right now. He's joining us to take a look at the Japanese yen. Earlier in the show, we were talking about the BOJ, the surprise decision to leave the yield curve controls in place. Spike down in reaction to, but I saw on the intraday charts it was kind of recovering. Let's talk about what you're seeing here in terms of the hourly time frame. Looks like a pretty well-defined trend environment to the upside here still.
Yeah, we're up about 8% off those 30-day lows. And like you said, Ben, spiked down in a big recovery then, almost back to where we started pretty much here. So this downward trend line that I had initially drawn is in being violated now as we speak, because price is kind of surging upward here. So that's something that we got to wait and see if it lasts. It could falter once again and retreat here. But that was a very short-term trend line that I had my eye on here that doesn't seem to be holding true anymore. In terms of some support, I thought the point that we stopped was pretty interesting. Right around 766, it was a point where price got not quite topped out, but found some consolidation there. And then you can see that we stopped right on the money there.
As I look at this, I see, possibility of 3 areas of balance forming here. You've got one which is formed clearly around, this goes all the way back to, we're talking about, what is this, a 7,200 level. And then the other one that formed around, we'll call it 76 right here, and possibility that we start to form another one around 78. Again, I like how you found those areas of support coinciding with the 76.60 area. Let's step away from this hourly time frame. Let's look at a bigger picture chart here in terms of where this puts us here, because here you can see the move we just looked at. It's just part of the long-term trend that's been in place, somewhat counter trend to what we saw playing out last year, but pretty well defined now to the upside here.
Yeah, pretty clear upward channel that's been going up since those yearly lows. And you can see that when we zoom out a little bit, the point that we stopped here was pretty interesting as well, because that was the confluence of this trend line, and it was just above our confluence of our purple 252-day exponential moving average and our yellow 21-day exponential moving average. So it didn't quite touch those lines, but it came very close. So that was there was a lot of support to consider to the downside in this name, Ben.
Rick, this is something you always talk about, right? How touching the trend line is one thing, but once you get the confluence of 2 or 3, in this case, indicators, it becomes more consistent, more something that you want to kind of watch a little bit more closely.
Yeah, and the point where we topped out too was worth noting as well. This area right here from those May highs, certainly something to consider there is that we stopped out right around the same point near 79.
Speaking of topping out, it looks like RSI has been kind of struggling to get anything going to the upside, supportive of this move up.
Yeah, a little bit of bearish divergence here, trending down slightly, even though price was rising here. But one thing that I thought looked interesting is that this could be a potential cup and handle pattern forming.
I like it, and possibly supportive of a little bit of consolidation forming around 78 before that next leg up. Rick Ducat breaking it down for us, talking about the Japanese yen in reaction to the BOJ's surprise decision. Rick's the chart master. That's it for futures for us today. Thanks for joining us. Stick around. Oliver Rennick, Morning Trade Live's headed your way next.
Opportunities can be hard to find, like catching lightning in a bottle. In uncertain times, it's tempting to retreat or simply wait and see. At CME Group, we empower those who act. We deliver tools to help manage risk and capture opportunities in every market climate, across every major asset class, to seize each possibility at precisely the right moment. CME Group, opportunity is everywhere.
Many option traders tend to focus on price and direction, but implied volatility can also be a big factor in options trades. In the Options for Volatility course, we explore what implied volatility is and how it can potentially affect the price of an option. For example, let's say an option trader wants to take a bearish position on a stock, but isn't sure whether to buy a put or sell a call. Both strategies are bearish, but looking beyond direction to consider the impact of implied volatility could help the trader choose between them. We also introduce strategies designed to harness changes in implied volatility. For instance, time spreads like counters and diagonals are designed to benefit from increases in implied volatility. Iron condors, on the other hand, are designed to benefit from falling implied volatility. After learning about the strategies, you can take the final assessment to test your knowledge. Head to the education tab on Thinkorswim for the full options for volatility course and a whole lot more.
TD Ameritrade Network has arrived on the floor of the New York Stock Exchange new location with access to the biggest newsmakers in Wall Street, bringing you in-depth market coverage and real-time trade ideas. Do not miss our exclusive interviews with CEOs, bell ringers, traders, and stock pickers, keeping you informed as you navigate your investments. Don't miss Trading 360 at 11 a.m. Eastern and the watch list at 2 p.m. Eastern, live from the New York Stock Exchange, only on the TD Ameritrade Network.
Many option traders tend to focus on price and direction, but implied volatility can also be a big factor in options trades. In the Options for Volatility course, we explore what implied volatility is and how it can potentially affect the price of an option. For example, let's say an option trader wants to take a bearish position on a stock, but isn't sure whether to buy a put or sell a call. Both strategies are bearish, but looking beyond direction to consider the impact of implied volatility could help the trader choose between them. We also introduce strategies designed to harness changes in implied volatility. For instance, time spreads like counters and diagonals are designed to benefit from increases in implied volatility. Iron condors, on the other hand, are designed to benefit from falling implied volatility. After learning about the strategies, you can take the final assessment to test your knowledge. Head to the education tab on Thinkorswim for the full options for volatility course and a whole lot more.
Good morning and welcome to Morning Trade Live. It's Wednesday, January 18th. Earnings continue. We've got more information from central banks around the world as the focus moves a little outside of the Fed. We'll talk to Bank of Japan. And of course, we're going to be looking at some of the macro data that continues to roll in. Nothing right now that seems to be disturbing the peace too much. We've got equities holding strong. Yesterday was somewhat of an uneventful session, but we did end up pretty solid as investors are continuing to hope that sliding inflation figures over the last couple months is going to lead to a calmer Fed, a calmer bond market, and maybe a turn in some of the frothy equities that have been beaten down over the past year. That's the stuff that's been doing the best in the last couple of weeks. We do have a pretty decent rally on our hands. Right now, I'm looking at charts to try and figure out if there is something really changing in terms of the regime for investors. There are already some signs that it is happening, but we're pretty much in a dead heat right now. If you're looking at the main macro indicators, which I like to do, don't miss market on close every day in the afternoon where we go through my risk radar, the stoplight, red, yellow, green, to figure out how things are trending. After Bitcoin's big bounce, that downtrend now is on hold. And as the dollar's slide continues, you've got at least about half of the main indicators looking like there could be some real relief for investors. Dollar sliding, Bitcoin waking up, trying to turn around, usually a sign of risk appetite returning to the market. Dollar's getting hit again today, as we're going to talk Bank of Japan and the decision there. Ben's going to hit that for us after we talk some earnings as we need to hear at the top of the show. Bitcoin a little changed right now, watching it very closely to see how much momentum there is here. The relative strength, the RSI for Bitcoin is red hot right now. This is one of the sharpest, fastest moves, even though it looks small on the long-term chart, of course, given how much it was crushed over the past year. When RSI gets hot in Bitcoin, that's usually a sign that things are heating up. For many assets, when there's such extreme energy in the short term, it's unsustainable, but that's not the case for Bitcoin. A very pure momentum play often tells us when risk sentiment is turning. So watching to see if now this thing can trade above where it was in the summer of last year, where basically it had a 6-month range where 24,000 was the upside. Coming into this week, I was highlighting 18.5. I do think that level worked because as soon as we got through it, we saw another 2 big days, and now we are where we are for Bitcoin here around 21,000. So BTC has an impressive move. Now, that being said, it was a tiny bit late to the party, to be honest, because we already started seeing some pretty big moves and beaten down stocks like Carvana, Bed Bath & Beyond, AMC, GameStop. So there's nothing really unique and new here from other bear market rallies that have faded and been a huge disappointment. That attempt by investors to pump up the stuff that's down the most, the companies that have veered the closest towards bankruptcy over the last year, etc. So in many ways, nothing here is really a shock when we do have these moments of optimism that the Fed's aggression is going to slow somewhat. Of course, over the past year, every one of these periods of optimism has been misplaced and has failed. Something does feel a little different in the air this time, though. Namely, it's the US dollar. The slide in the greenback here tells us that financial conditions are loosening over the last 3 months. But it hasn't had the same move in bonds. And this is very interesting because the correlation between the dollar and interest rates is really broken now. The dollar's big slide, if you had told me this was going to happen 4 months ago, I would have told you, well, rates are going to be even lower than where they are, but they're not. Because the relationship between bonds and the dollar was very reliable over the last 2 years. Now it's breaking. We've had this big dollar move to the downside. It's continuing this morning, but yields are still stuck at 3.5%. So the dollar and Bitcoin fit into a very risk-on message, but the bond market message is one that's quite confusing right now. The 10-year looked very comfortable at 3.5. Yesterday, we heard the bond calming story from 2 very smart guests that joined us. Mike Green from Simplify, Zed Francis at Convexitas, both strategists and analysts who were spot on last year in the role bonds played in the bear market. And they both told us that bonds are going to be more calm this year. But with that said, we're not getting a lot of downside in the yield. And if you're looking over the last year and a half, that's what stock investors have wanted to see. So let's watch to see what happens with the 10-year. If it does break through this 3.5 and start to move lower, then we have to ask, is it happening because inflation really is cooling at a rapid degree? Or is it because investors now are happy to take 3.5%, maybe even less income if recession is near? Right now, the bond market message is a tough one to figure out. At the same time, stocks have not cleared the hurdle of their long-term downtrend line. So while we do have some signs here that risk on is building, bonds and stocks haven't quite confirmed it yet. The S&P is really trying. We're trying again here this morning to punch through it. Let's see if we can do it. Can we get above this line that marks the bear market for U.S. equities? We're going to find out hopefully pretty soon. Let's talk some earnings here to start off. Renita Young joins me, our senior markets correspondent. Renita, let's talk airlines first because we had a huge explosive rally in airlines the last week. Do earnings confirm the sentiment?
Today they do. So I'll say, though, with the caveat that United Airlines earnings, they blew past the estimates, of course. They guided for a much more upbeat year than analysts expected. And this company, this airline swung to a profit. It's proving that reputation for the legacy airlines, at least. Yesterday, we saw a pretty big beat with Delta as well. But despite the horrible winter storm, they swung to a profit, earned $843 million or $2.55 a share, swinging from a loss of $646 million or $1.99 a share a year ago. But the adjusted earnings per share figure was $2.46 versus the estimate of $2.07. So well above expectations. Revenue came in at $12.4 billion versus that $12.26 billion for growth of 51.4%. But that was still a little bit less than the growth of fourth quarter in 2021, which is 140.1%. But it was still pretty good. Operating income was at $1.4 billion versus that negative $408 million number. And so passenger revenue per available seat mile, that was 17 cents versus 13 cents year over year. So it still showed a little bit of an increase here. But looking forward, United Airlines is expecting a very positive first quarter. earnings per share between 50 cents and 51 cents, or 50 cents and $1 rather. That's well above the current FactSet estimate, which is at 31 cents a share. So it expects to grow revenue around 50%. Nothing but positive things. Coming from United Airlines this morning.
The coveted triple beat.
Yeah.
Right? Grand slam. I mean, pretty much everything there, including, well, I guess that would mean 4. So if we include the trailing beat on the top and bottom line, that's 2 in. Okay. The guidance, that's 3. And then the swing from losing money to making money, 4. Boom. That's your grand slam earnings. I mean, you can't ask for anything better. And so the stock now rallies as a result. And it had already been at the close to 1-year highs. So this is pretty impressive. Kind of puts on the table the possibility that maybe airlines can start to trade back at these pre-COVID levels now that they're actually making money again. That's kind of important.
It is. It's hugely important. And so that's the spot where everyone's been trying to get back to. That's what the deal is with the 2019 comparison. So we'll see if this can actually follow through the rest of this year.
Yeah, that would be huge because we see the data and all the employment, the services side, people want to travel. That's where the strength is in the economy. So it's good to see that the stock is actually responding in kind. That being said, very much reopening vibes, back to normal vibes from United. But then we can't get away from the COVID. There's stuff. Moderna's got some headline news this morning that's worth mentioning as well.
Right. This stock is popping on a trial for a drug that's going to help RSV in older adults. And so this is huge because they've been targeting this as well as other RSV, different diseases or different infections, and it's the phase 3 trial of the Conquer RSV, and it went through review by an independent data and safety company. Moderna wants to submit this for regulatory approval in the last half of 2023, the first half of 2023. But Stéphane Bancel, he's the CEO at Moderna. Of course, we all know that he's been blasted across the internet for the past few years and across TV. He says this is a really huge step in preventing lower respiratory disease for older adults. We're talking 60 years of age or older, and that Moderna is going to publish the full set of data in the coming year of this complete study.
Okay, so it seems like a natural transition from COVID treatment to this as a vaccine, given the respiratory element of it. Market's still treating it as a new product, which it is, which a lot of people have been waiting for this stock to continue to kind of drift away from just the COVID-specific vaccines. Big pop. A lot of optimism here this morning. All right, from earnings to Moderna. Thanks, Renita. Good start here from United. Big number. Let's talk the macro situation. Let's talk some economic data as well. Firstly, with the dollar down and the Bank of Japan. I got Ben Lichtenstein with me, fresh off the Future Show. We've got retail sales data. We've got PPI here, but I think maybe the Bank of Japan actually is the most important thing. Let's get that out of the way real quick, Ben. What'd they tell us? Dollar's getting hit right now, down about 0.5%.
Dollar's getting hit. We're seeing some volatility in the Japanese yen in reaction to, as Oliver mentioned, the BOJ. A bit of a surprise. They decided to leave their yield curve controls, the cap, in line. And, well, we saw actually some stocks rallying in reaction to in Asia. The Nikkei was up around 2%, I saw. And we actually saw that 10-year JGB yield come back off to about 0.4% from 0.5. That's the level that they're capping out at. And, you know, Governor Kuroda said that he wasn't ruling out offering a negative Fed's fund, a negative rate. Ultimately, he talked about how they were going to boost the loan facility to commercial banks. And, you know, they're going to it's going to cost them to do this. I mean, over the last 4 or 5 days, they've spent about $100 billion in defending that level. So again, a bit of a surprise. Markets were expecting them to move away from that yield curve cap, that control, but it does sound like they're going to stick firm with it. And again, I mentioned the yen sold off. I mentioned Japanese stocks rallied, but the yen sell-off was somewhat short-lived. It's actually starting to work its way back.
Yeah,
and,
it's back positive now.
Again, so definitely the first of the focus of central bankers and some of the decision making as we head into the beginning of February.
So the idea that they're keeping the range for the yield cap, the same that they highlighted in the last change, which was a little bit of a hawkish surprise, they let it drift a bit higher. Was the expectation here that maybe they would love to drift even higher? And so this is a little bit less of a hawkish surprise, just kind of towing the line, but the market's still interpreting it as yen positive, which tells us that there still is some credibility the market is giving now the Bank of Japan that they didn't before, I think.
Yeah, I mean, there were some expectations that they would basically, forced by the market, have to act and respond to conditions. But again, standing firm and kind of just suggesting and kind of pointing to what we've seen as far as inflation not being a major concern and economy slowing right now, that being the focal point. And along those lines, we saw kind of similar conditions here in terms of the retail sales data, Oliver, showing again that economy here in the U.S. slowing. So down 1.1%. And here you can see we're expecting a decline of 0.8%. So this is a little bit larger than expected. You can see the core retail sales, again, most of these numbers coming in higher than expected and topping prior levels, actually prior levels getting revised lower. So again, suggesting that some of the Fed's initiatives in terms of acting to slow the economy through higher rates have been working. In addition to that, we're also seeing PPI data come in significantly lower than expected and below prior levels. So all of this giving the market a little bit of firm ground to stand on here today. I saw rates which are coming off. The dollar's been coming off, which we can get into in just a minute here. Again, a little bit more in terms of market expectations and reaction to. But look at PPI down 0.5%. The prior got revised lower to 0.2. We see again also here the core number coming in line with expectations but below prior levels. Look at the year over year, Oliver, from 7.3 revised to 6.2. And I just want to remind everybody in terms of where we are right now at 6.2. I mean, I was looking here, it was just back in April, we're talking July, we were at 11% basically. We dipped down to around 10.8, but 11.3 is where we topped out. So that's a significant decline, again, a reflection of what we've seen in terms of the Fed's initiatives. Now, lastly, bear with me here. At the top of the show, you were talking about that disconnect between the U.S. dollar and rates. And I think a big part of this has been the dollar trying to get a feel for what's right, the Fed or the market, right? Because like the BOJ, there was a little bit of a different indication in terms of what the central bank was signaling versus what the market was telling us. And here in the U.S., financial conditions have eased significantly relative to what the Fed's been telling us. With that, we've seen the dollar come off. But with that also, I think is important to remind everybody that it's the tail that's wagging the dog. It's not just rates coming off here in the U.S. We've seen the Japanese yen firm significantly, the euro currency firm significantly, the British pound. So with all that momentum to the upside in terms of these foreign currencies, the basket of currencies that's rallying weighs on the U.S. dollar. Lastly, I just want to point out, again, we just went through the inflationary conditions here in the U.S. We got EU numbers, core CPI, Oliver, at 0.6%. So on a month-over-month basis, year over year at 5.2%. That's above prior levels. The CPI, the headline, came in lower, but the year-over-year number is still at 9.2%. Lastly, I just wanted to point out that we also had the UK numbers out. Their CPI, Oliver, year-over-year, still 10.5%.
Jeez.
Well, 5 times above where they're looking to target 2% levels. So you're going to continue to see those other foreign currencies remain supported, the U.S. dollar weighted. I think even if we were to see yields start to inch up here in the U.S., because there's a bit of a dollar yield disconnect right now, and I think that's the tail wagging the dog, strengthen the other foreign currencies.
Yeah, definitely. When there's such high inflation levels compared to our kind of cooling levels here, also brings up the question whether or not this lower dollar is going to be as well received by the stock market. It looks like it is so far this morning, but it's a little bit of a different situation. If the rest of the world is still having to get more aggressive from their central banks, somebody is. There's always a central bank right now that's having to tighten things up. It seems like we're just kind of passing the baton. All right, love the rundown, all the data. Appreciate it, Ben. All right, we are fully informed. Let's get started and talk some more big strategy going into this year. We've got a packed morning show with about 12 minutes until the opening bell. We'll be right back.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Looking to improve your portfolio management skills? Our portfolio management webcast series breaks down key concepts like retirement planning, income generation, ETFs, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcast and start learning today.
Thinkorswim by TD Ameritrade is more than a trading platform. It's an entire trading experience that pushes you to be even better and just might change how you trade forever. Because once you experience Thinkorswim by TD Ameritrade, there's no going back.
Oh, yeah, I'm going to take off.
Now, you downloaded the TD Ameritrade mobile app?
Yeah, actually, I'm taking one last look at my dashboard before we board.
And you have Thinkorswim mobile?
So I can finish analyzing the risk on this position.
You two are all set.
Choose the app that fits your investing style.
I'm Nicole Petalides, live on the floor of the New York Stock Exchange, empowering investors every single market day. Tune in to the TD Ameritrade Network.
Dollars down, inflation numbers continue to hit where bulls want, lighter than expectations as PPI this morning shows negatives across the batch of numbers. Good for stocks right now, up about 0.7%. The NASDAQ. Peter Anderson joins us, founder at Anderson Capital Management. Peter, thinking about the slide in the dollar here, that's been kind of the dog whistle for bulls in the last 18 months. Does it work right now? If other central banks are just going to take the Fed's place?
Well, the sliding dollar certainly is a strong signal, Oliver. There's a lot of other things that I look at too. I wouldn't get too transfixed on one of these multiple parameters because it's a complicated scenario and we are still in the throes of recovering from COVID as we see in inventory and actually in the stock market and all the economic data that we're reporting daily, frankly. So while the dollar, that's a nice sign, I also think things like the PPI number today is equally as important because it's showing us that inflation is gradually, and I highlight gradually, but consistently declining.
So those other indicators that you're looking at, tell us about that. What here is on the list of priorities when you're looking through the market, trying to figure out what comes next?
I'm telling y'all, it's going to be a good day. It's going to be a good day. Good morning, Pent Up Wanderlust. Good morning, Elle, living my dream trading. I hope you all have a wonderful, wonderful, wonderful trading day today. It's about 5 minutes before opening bell. So let me go ahead and get this housekeeping out the way. Okay. Hello, my name is Sandra, and welcome to my channel From Lack to Legacy. On this channel, we're all things money, investing, and mindset. Particularly how to go from a scarcity mindset to a mindset of abundance. If this sounds like something that you're interested in, you have found your people, you're in the right place, you are welcome here. We are a community of traders. I'm a new trader. So if you came here looking for an expert, that's not this. This is a learning community that I created because I couldn't find one. And so you know what Black women do. When we can't get what we need, what do? We make it. And that's what I did. I just decided to open up my kitchen and invite folks in to trade with me because I'm a teacher. I'm a retired teacher. I've taught for almost 30 years. And I know how learning happens. And it happens best when we're with other people who have the same kind of mindset. It happens best when the risks are low and it's a safe learning environment. And so that's what I wanted to create for myself and for anyone else who wanted to join and come in. So if that's what you're looking for, if you're looking for a trading community where you can ask questions and be a part, and we cheer for each other, we encourage one another. Like when trades don't always go the way you think. And so that's what I love about this place. That's what I love about the people that have congregated here. So if you have a question, drop it in the chat. Somebody will probably address it. If they don't, I'll do my best. But stay with us. That's what it is. It is what it is. Everybody knows that I trade QQQ, and my boo is up doing her thing today. So I can't wait. I can't wait to see what the trading day holds. Hold tight, you guys. I need to. Hey, C-Bar, welcome, welcome. I need to adjust this air conditioning. What the heck?
And then I think the regional feds will start giving us
A little
hints and signals
glistening.
that we're going to pause for now.
Well,
The
it's been really
strongest thing
cold
they
in
might say is
PDC lately,
pause,
so I'm
which would be
surprised.
incredible if they did, because I do think then growth stocks would take off like a rocket.
So those growth stocks, they're on the move right now. But they're not just growth stocks. They're
That'll do it. It won't take long for it to get cold or to cool off in here. So that's what we're doing, people. That's what we're doing. That's what we're doing.
Time and time over again. So if the Fed is going to pause and they see this response, does that then have a kind of circular effect that comes back
one
to
right
the
there.
Fed, who's told us that they don't want to
Hey,
see this?
Linda. Welcome, welcome, welcome. Happy to see you guys here. I'm just waiting for the bell so I can check this money to see, because I brought in to QQQ about three calls yesterday. And so I'm just looking to see, they went up quite a bit overnight, over $1. I think QQQ is up over 283. Let me check it again.
After any public statement is made, they
Yeah, it's at 283.20. I think at one point she had gotten up to 283.50. So I guess she tested that 50 and then was like, nope, no go. So I don't have much to do. Like normally I would be setting up my trade to, prep for trades. I'm riding this one out today, you guys. I'm gonna ride these little calls out, see what they do, cash out, and keep it moving. But the truth is, I kept looking at my charts. I was looking at the weekly chart and the daily chart, and she might have a little go-go juice in her. So what do I know? What do I know? So I'll just peek back. Opening bells happening in a minute. So I'll do it later. I just want to see how she starts out. You can see that she is overbought. And we're probably going to come down a little bit to correct that, to get a little relief. And I'm hoping maybe she'll just keep going. I am not even mad. What are you guys trading today? What's on the menu? What folks up to today? Living my dream. I know you're trading today. Well, I don't know you're trading today, but I know you are a regular trader. Okay, folks, y'all know the drill. Let me pull y'all out of here so I can go check this here money. And hopefully it's something really pretty. Something looks good. It should be more, it's higher than it was yesterday because, of course, we are, yes, Lord. I'm sorry, I didn't mean to say it like that.
Play the potential for kind of a growth stock revival, but then avoid that could be the target for more.
I'm curious to see what she's gonna do today. I am just, I'm beside myself happy. 283.50. I brought in around 281, I think. Let's see, I was somewhere here in the choppy chop. So no, I got in around, I got in somewhere around 280 something. So we shall see what the day holds. Y'all got any input on this joint today? What's happening? We kill. Hey Bumpy, welcome to the club. Hey Johnny, good morning. Good morning, everybody. Good morning.
And not shorting them. I do think the
Is anybody else who's trading? Why y'all so tight about what y'all trading today? I'm moving this way. I cannot wait, y'all, seriously, to get out of this apartment. It's the worst lighting in the world. I can't figure it out. I can't figure the lighting out in this joint to save me. So I can't wait to get out of here. Let me get over here and keep an eye out on this money.
With high beta, for instance, and they will move when the market moves, they will move against it. That's okay.
I'm gonna learn today.
What I'm actually looking for is a return to normalcy when you short a stock, not because you're just trying to buffer the vol of your portfolio, but you actually think the company is poorly run.
I needed this today, y'all. Y'all been here with me, shoot. I've been, you know, yes, all about the nanos today. Yep.
More rationality returns to the market.
Good for you,
But, I
Bumpy.
said before, you know, if you can only
I did a little different with my tea today. I mixed a lemon tea in with my eucalyptus honey tea. It's quite yummy.
with an uncertain environment that we have now. So
It's quite
for those
yummy.
that can have the ability to short, I would encourage them to look at that.
Okay, so let's look at this. Y'all, it's just me and y'all for a little bit until I can figure out where this money is going. You know, I don't want to.
Right now, but also in the longer term for
I don't want to sleep no
I do
money.
think will go down.
Thanks for
I'm
sharing
gonna
it with
look
us
at my
here.
market watch, and I think it's gonna be a green day. Tesla is already up. Amazon, everybody's green except for Costco. Costco's about 4 cents down. They'll be green shortly. Oh yeah, there we go. And I'm looking at Pepsi. Even Pepsi looks like she's coming into the money too. So Nvidia is having a great day. Let me share this heat map with you guys. I'll stay put. QQQ.
Talk about that product.
Okay, everybody on the move. Everybody on the move this morning. Not trading anything yet, Johnny? Okay. Well, I'm going to hold on to these little calls until, you know, I'll leave a runner. I'll take 2 or I'll start shaving off some profits. But it's looking pretty good, I guess. Wait a minute. Wow, Nvidia was just super bright. Moderna is having a good morning. Let's see, how much are they up? I was listening to them talk about they're up 7%. Yeah, up over 7%. And Tesla's up almost 3%. QQQ is up less than 1%, but she's on the move, so I'm okay with that. 283.45. I think she's gonna make a run for it. I think she's gonna try to get past 283.50 for sure. Let me look at the volume on this. Y'all have taught me so much. So much. That's a lot of. Okay, let me pull this back in so y'all can see. I think I can sit in this for a minute. So we'll see. Just watching at the moment. Okay. Y'all see my QQQ calls working. This is the fun part of trading. There are days when it's not fun. There are many days when trading ain't fun. Yeah, you looking at Moderna? Mm-hmm. For the fall. You know, I don't know because I don't follow anything but you know what I do. So let me see, because look, why are you putting up and clowning? Okay, so here's how I steady myself when that thing starts doing, you know, moving all crazy. I just look at the charts over time. You know, I look at the weekly. What is my weekly saying? What is my daily chart saying? I know in the morning it's choppy many times, and that could be scary. Not even that it's scary. It could just be a little unnerving. But I steady myself personally as a new trader. I steady myself with information. Like, let me go back and look at this again, because you know I've looked at it on the hourly chart. I've looked at, and what I'm looking at is not necessarily the candles. I'm looking at my indicators to see if they're indicating to me if I should stay in this trade or get out. And so would y'all look at this stuff with me? Because I'm going to stay in this trade, I think, for a minute, only because of, this is my hourly chart. Okay, because we know what the drill is. Let me look at the daily and the weekly. That's the one that kind of helps me And y'all help me if I'm wrong. Tell me if I'm wrong. But my daily, my weekly, and the daily charts are the ones that I kind of look at to see, okay, should I hold? Do I have some time to hold in this trade? And this is a good sign. She's above the 9, the 13, the 50, but not quite the 200. And the 200 is sitting way up at 294. To me, this looks like okay. I'm always looking at like how those, like my RSI, is it pointing up? Are the values going up? And what are these lines doing? Because I know once they start to curl down and once this thing starts to turn green, like that darker green, it might be time for exit. So that's what I'm looking for. And as long as this, my TTM, my lemon squeeze, as long as my lemon squeeze is looking like positivity, and I think these light blue ones, y'all know I'm serious. This is how I would explain it to a kid. Did you see that thing turn red?
It was just a matter of
282.69. We gonna see.
So Amazon starting today.
Ooh. Let's go over here and look at this market watch. Okay, Moderna's still leading the pack. Okay, you better come on, QQQ. That's why you can't take your eye off of this. QQQ is a piece of work.
Company's history, which is what, almost 3 decades old.
What
That being said, it really
happened?
is just a fraction of Amazon's workforce. The latest round is expected to hit the retail.
Get back
and
up over
HR departments
283.
the hardest. That's according to Bloomberg.
Okay.
The cut started last
Jeez.
year and hit Amazon's devices and services group hardest. But Amazon, just one of many companies who grew a little too fast during the pandemic,
myself.
and is now right-sized. It's actually doubled.
Good morning, Shauna. Welcome, welcome, welcome. Welcome, welcome, welcome. You know what we're doing. You already know how it goes. Everybody is here. We're checking in. Shauna, are you going to trade with us? We need to set something up so we can get you started. I promise you, it can be fun. When the money goes up, it's fun. It's not so fun, you know, the other way. But if you have enough wins, I hate to say wins, it's really enough gains. If you have enough gains, yeah, you know. Okay, hold tight, y'all. I gotta go. Let me go. Let me go. Because I'm about to take some of this money off the table. Oh, no. Oh, no. Uh-oh. We're going to do that. 282.68.
Reliable theme. So Amazon the case here as well, as the market is trying to prioritize what it sees coming from the Fed. Up 1.5%. Pretty much everything in big tech except for Netflix, which has got earnings around the corner, is
I'm
up
going
this
back
morning,
to look at
including Apple, which is
QQQ.
higher. Mixed reality. Okay, what is that, Caroline?
70.
You have mixed feelings about the metaverse, I can tell. You've never seemed all that interested.
Yeah.
And mixed reality. And if price
Okay,
was
I'll be
one of
sitting
the
here.
reasons why you have these mixed reviews on it, I have a little bit of good news for you.
Is anybody what are you all doing with long holds? I gotta start, you know, putting together my plan for some long hold purchases. So y'all, what y'all doing? Hey, y'all have been so good to me. Thank you, thank you, thank you, thank you. I don't know if anybody here is interested in starting a YouTube channel. I know Living My Dream, you have yours. You know the parameters then for becoming monetized on YouTube. You have to have 4,000 watch hours and some other things. But you guys, we're at 3,600 watch hours. Can you believe that? I so appreciate you all. Eventually, I plan to learn how to trade. Yes, we want you to. Please come join us. The girls, we stay together most of the time. The guys bump in and out. And some of the girls bump in and out too. But most of the time, we're just chatting it up. We chat it up in the morning. We check back in. They cook. They do all kind of stuff. I do too. I break for lunch. We do it all. And then we come back at the end of the day to just, you know, to wrap up. So, yeah, Shauna, we got you when you're ready. Okay, wait a minute, Johnny. What'd you say? I don't think the ultimate lows are in. No, but you could dollar cost average. I'd rather wait for long-term buys. Johnny, I've been sitting on the sideline holding cash for a long time. Yeah, I don't think the lows have hit us yet either. I think maybe in the second half of the year, maybe we can start to see, we can start to see which direction. But I'm just curious what you guys are. Can't pick it up now. Yeah, Shauna, you do need time. Yep, you do. You need time to dedicate to it. I understand that because, it's like learning anything. It's like if you were going to go back to college or go back, you definitely want to be totally present for that kind of for that kind of learning and commitment. So whenever you are ready, we are here. We are here, here, here. Shauna, aren't you coming? Aren't you expatting soon? Or what's going on? We want to cheer you on there too. Okay. Let's see. Bulls and Bears are fighting today, baby. It's a fight. Yeah, I don't know. You guys, I think I am not an individual stock person. Oh, sorry about that. I'm not an individual stock. ETFs work. Why not? Index funds, ETFs, easy breezy capeasy. Why am I trying to outguess the market? I figure QQQ, SPY, anything that I think Schwab has some great ETFs. Who's Kathy? What's Kathy's name? What are hers? Are those Vanguard, Schwab? You can't go wrong. You can't. Well, I guess you could. Let me not say that. But we were talking yesterday about Our Rich Journey, that couple. You all, please, if you haven't familiarized yourself with them, please do. Please do. They amassed quite a bit of money investing in index funds and ETFs. And so I'm a fan because it's kind of like set it and forget it. I would dollar cost average into those, an ETF or an index fund. There's some that I like. And so I think that's going to be my approach for long holds. I used to buy individual stocks. Like at one time I owned Tesla, Target, Amazon, all the biggies, all the FANG stocks for sure. And when things started to, really go bad, I'm sorry, y'all, I bailed. I had things to do. I knew what I was doing. I was coming out anyway. I was leaving, I transitioned. I did the whole big old transition. So yeah, I'm ready to. I'm making my list, but my list will primarily be comprised of index funds, ETFs, really easy things. I might throw a REIT or two in there when that market picks up. Who knows? But I don't know that I will be doing a bunch of individual stocks like that. What the heck? Okay, let me get over here and see what we're doing. What's happening on my market watch? Okay, everybody is green. Even Pepsi is coming. I need to see this number going down. Okay, even Pepsi, 48. Hmm. These people are fighting today. I'm cheering for QQQ to get above 283.50. At 283.50, we have some life choices. We got some life choices to make. We will see. Looking good. That first 15 minutes was a fight, though. Googly moogly. The Bulls and the Bears are at it today. Are you a bull or a bear? To be honest with you guys, I'm a bear, but I'll play a little bull rally. Uh-oh, look at us. 283. Y'all not gonna weigh in on this QQQ move, my OGs? That's good because it's hard. It's a hard time. It's hard to time the market. Yeah. Yeah. I do both. Yeah. The thing with waiting is most people never catch the bottom and it bounces. Then sit looking for the pullback to go. See, I would never do all of that, which happens, then feels it's too high. Nope. Yeah, I've heard people say that. I don't think that would be me, because I think if you know, it's just time. You know what I'm saying? If it's never too late to invest. So that kind of thinking is so flawed that you're waiting and waiting and waiting. There's never, well, I should say this, there's never a perfect time. You're never going to get it perfectly timed. So you better have a strategy. Either you're going to dollar cost average in, or, you know, you're going to wait till you think it's a good time to buy, but you'll sit on the sidelines forever being indecisive. So at some point you just have to decide. And if you aren't investing, I don't know what that's all about. Choppy, no direction. Yeah, that's the good, because it's hard to yeah. Yeah. I'm just looking for a place to get off. I don't know. I hate to bail so early in the morning. Markets are real choppy under this strong resistance level. SPY needs to break above 400. Okay. For the markets to move. Well, shoot, Johnny, that little bit of move I got, I'm good. I don't need a big move. I need this little bitty move QQQ is doing. That little bit, because as soon as it gets back up to 283, y'all, to be honest, I don't feel like doing all this today. So I am, and that's important. If you don't feel like trading, you should not. Because I don't feel like I have the patience for it today. I think I want to be more of an observer today. So when this thing gets back up above 283, I'm going to sell 2 of my calls just because I'm tired. And I'm going to leave one runner, and she could do whatever it is she feel like she got to do today, because I just don't feel like watching it all day, to be honest. And knowing, she'll be here tomorrow. The market will be here another day. If I don't make all the money today, it'll be another day. But I will leave one runner. I just don't want to miss out on this, what's right here on the table. So I'm going to grab these pennies, y'all, real quick. Let me go down. That's what's throwing me off, too. I can't see any real movement. Oh, yeah. That is a bunch of chop. Okay. Hold tight. Hold tight, y'all. I'm coming out. Create a closing order. 283.11. I'm just going to keep watching. Like, what is she doing? 283.08. Mm. Okay, well, hold tight, sugar wooger. Maybe we don't have to go just yet. Save that. Let's look at this chart. What are we doing? Okay, I'm going to bring y'all. Y'all know what I'm doing. I'm just looking at this chart. Of course, 283.39. Beautiful. We'll see if we can get above 283.50. I don't know. I'm looking. Just looking. 283.45. 46. There we go. 283.50. We're testing. It went up to 283.50, and it does that little bouncing and vacillating that it does. But I'm okay with that. Yes. Come on, QQQ. Just make a run for it. Run for the border so I can get out of here today. Y'all, look at her go. 283.78. Yes. Looks like we might get a little crossover. Let me show y'all what I'm looking at. So I don't. Okay. I'm gonna let y'all peek. 283.69. The high was 283.90 something. So we'll see. I don't know. Come on, QQQ, fight for it. Yeah, I got some things I need to do today too, so I'm not gonna trade all day today. Again, like I said, I'm gonna sell these two and leave a runner, and we'll see what we catch today. See if we catch something good. That RSI is sure pointing straight up to the sky. I could tell you that. Okay, sorry, y'all. This is when I go down to the 3 and the 1 because I like to see what's happening. I just do. I like to see. It helps me. Okay, so look, I can see. She's doing this little green thing, but the RSI is pointing down, 67. What are we doing here? Okay, we've cleared these joints. And it looks like you all see that pattern that I'm seeing where she does this up, down thing, up, down thing. $283. We're gonna see. Okay. Well, just so you guys know, I'm not going to be trading all day. Hey, C-Bar, stocks open higher on data that suggests inflation is still high, but is beginning to ease. Yeah, I heard that this morning. You guys, I'm cutting out early today. Honestly, after I close out this trade, I'm out because I got to get some stuff together here. And I think today I'm going to go sit out in the sun. I need it. I need to walk. I need to be outside. Shauna, I'm so excited for you in PV. You know, we've got sisters everywhere. I'll tell you all where I'm headed to next, but I am leaving PDC. So I have a destination, and I think I'm going to be closer to where you're going, Shauna. So yeah, Elle. Listen, let me tell you all what happened yesterday. This is when you know it's time to pull back. It's time to pull back, pull it in. After I got off YouTube yesterday with you guys, I was supposed to take a cart. A lady is buying this cart, and I was supposed to take it to her. I was too tired. So I said, I'm just going to take a nap. I'm just going to close my eyes for like 30 seconds. Because y'all know I was tired anyway. I don't sleep regular hours. So I said, I'm gonna close my eyes. You ever do this? I took a nap. I bounced from bed to bed. I slept a little for a few minutes on the couch. I went and got in the most comfortable bed. You all, at about 6:30, I finally woke up. Has this ever happened to you? I know it has. At 6:30, I wake up and it's like semi-light, semi-dark. And I'm thinking, oh my God, I have slept all night long. It is 6:30 in the morning. I got to get up and start this train all over again. I can't do it. I just can't face it. And so I was like, nope, I'm not going live today because I thought it was 6 in the morning. You all, do you realize it was on? I had only slept for like an hour and a half. It was 6:30 in the evening. But have you ever woken up like that and been so disoriented? I was so disoriented. It was like, this isn't good. So I'm pulling back, and I am going to balance. I need to balance too. Yeah, trading will teach you so much. I have to balance. And so I'm going to bring a little balance into my life. Hold on, y'all. Whoa, whoa, whoa. Whoa, whoa, whoa. What's she doing? Yeah, let's get some bounce in here. Bounce with it. Oh, Lord, that's not a bounce. That's not a bounce, lady. Hmm. Hmm. Let me look at this chart. Okay. Tell you what we're not going to do today is sit here and watch money disappear. Hold on. Let me go over here and sell these two right quick. Matter of fact, y'all know what? Watch this. Watch this. Watch me close this whole order out. I quit. I'm done. I'm taking this money today. Whew. Money made. I don't have the patience today. Hey, y'all. Bouncing now because of VWAP. Should bounce at 280, 285. Well, we'll get back in later because I just took that money, y'all. I am tired. I took all the profits. I did. I'm sorry. I did. It's a win. It's money. It's in the bank. If she does some spectacular stuff, I'll try to find. Yep, I'm done. Johnny, I'm tired. Yesterday it was nerve-wracking watching it. And so she did her thing. I bought in around 280 something. And so, yeah, we're good. We're good. I bought in definitely under 281. So let me go back and look at it. Yeah, I'm good. I will take that money. Yes, I will. Let me just look over here and see. That wasn't bad. Okay. Yes. And I'll keep watching it periodically, y'all, but I don't want to be tied to it today. Nope, I don't want to be tied to it. Nope. Yeah, and I need to prep for this evening too. So, you guys, I got out. I will check back in a little bit later today, but I got to go deliver this doggone cart to this lady. I got to be a woman of my word. So I got to go do that. I'm going to go grab a little sun. I'm out. I'm not holding anything. I have no calls. I have no puts. I have nothing today. The 3 calls I cashed out and it was a good one. It was a good trade. So you guys, I will check back in later today. You guys let me know what you're trading and I'll see you guys a little later today. Bye, everybody. See you guys. Bye, Shauna. Bye, Elle. Bye, Bumpy. If y'all need something, email me. But I'm going to be prepping for tonight's class, too. I think I'm going to start, just so you guys know, I'm going to start with how to set up orders with the things that I feel most comfortable with. And then I'll go to support and resistance. And what else do we have on the agenda? But that's where I'll be starting. Talk to y'all later. Bye, folks. See y'all this evening.